How you doing?
I'm good. I'm busy.
Yeah,
I'm busy. I'm good. I'm moving forward.
awesome. All right, just wanted to ask you a question, or a few questions actually. So let's start off with what's a VA loan?
Well, that's a really good one. It seriously is because a lot of people, a lot of veterans, eligible individuals, and active duty have used it, and they're not really quite sure what it is. Believe it or not, there's some people, a lot of people in my industry that are really not quite sure what it is. Essentially, it's a guarantee, and it's a guarantee for the lender, not for the veteran. So the guarantee, to a certain extent, covers the lender in the event of default. Default by the veteran. So this guarantee allows the lenders to do things they otherwise would not if the guarantee weren't there, like or lend in situations where they otherwise would not. For example, the no money down, which people are most familiar with, either little or no money down, or credit. A veteran with or eligible party with poor, I don't want to say poor, let's say average or good credit can get pricing as if their credit were excellent. Or, for example, they had some type of major derogatory item within the past few years that will help them out with that. So credit, and with little or no equity. And so the lender is covered. They can lend and make their money, and the veteran benefits from it by getting a loan in the first place and a loan with excellent terms and conditions.
Why do you want to do VA loans?
Well, I've kind of developed a mission behind it. And, at first it was just to do VA loans, but after I've been in the industry 23 or 24 years, and I started becoming more and more frustrated. So now it's turned from just doing something internally to changing the this part of the industry. That's what I would like to do. I would like to affect some change. In fact, my mission would be to assist the VA, because, by the way, backing up, the VA has been doing an outstanding job compared to where they were years ago. They're really, really doing a good job. So I do recommend visiting the site. Make sure it has the .gov on the end of it, not the private ones. I mean, they're cool, but I recommend going to the .gov to get it from the horse's mouth. But my mission would be to assist the Veterans Administration in disseminating timely, accurate, and non-biased information to veterans, active duty, and eligible individuals, so that they can make an informed decision as to when and how to use their VA loan benefit. That's my mission, and that came from my frustration working for other places. I won't mention those places' names, but the frustration is still with me. This is there's two areas I've seen it in, and one, it's like they're not putting a full effort, a wholehearted effort into serving veterans. They say they do it, but their actions don't back that up. Like there are thousands of companies that are doing VA loans, but in my opinion, there's a relatively small amount that are truly serving the veterans. Training is one of them. Places I've worked at, they're loan originators. They teach them enough to get the business in the door. Again, this is not all of them. There are some that are doing a bang-up job in that small percentage, but the large percentage that are lagging, they're personnel. They know enough to get the business in the door, but they're not technically and tactically proficient at doing VA loans, and as a result, veterans are suffering. Veterans are choosing other options, FHA loans, conventional loans, when they should be using their benefits. So basically, you get bunk information, and you get turned off from doing the VA loan, or the people they're ill trained, and they inadvertently steer the veteran, and to some other type of loan that they shouldn't be doing. So there, that one. So, and it's training also processors involved. You'll find some ill-trained processors and unfortunately underwriters. I remember many a times fighting, and this is not just at one company. This is at more than one company, and these are large organizations, not small ones that have these deficiencies in the training. So I'm literally fighting with underwriters, wrestling with processors, and listening to disinformation or incomplete information put out by other loan originators. So that's what kind of started me down this path of going on this mission. If I can affect, the entire industry, so veterans get a uniform experience, no matter where they go. It doesn't have to be at United Real Estate Capital. Of course, I'd love the business hall here. Doesn't have to be here. I don't care where you go to, as long as the experience is uniform for the veterans. It even's gone so far as I've read, seen a couple real estate contracts. Blew my mind. It was put in the contract that the seller would not accept someone using VA financing.
That's crazy.
Is that a load of crap or what? Seriously? You're gonna, on the veteran's head? You might as well just do it right there on the veteran's head. Seriously? They got that from, maybe in the past they had a bad experience with maybe a VA loan taking a while. Well, that wasn't because the VA loan takes a while. It's because the lender sucked. They did, just to put it point blank. I've closed VA purchase loans, more than one, in less than 30 days. They couldn't do it because they sucked. And this is incumbent upon the leadership in that organization. Get their acts together, and if you say you're going to provide these VA loans and you're going to service veterans, then do it. Don't just talk about it. I won't mention which bank. I still remember, I can laugh about it now, but I was irritated back then. I go up to an ATM machine to draw some money. It's one of my bank's ATM machines. And there's what do you call it, advertisement, promotion, whatever, on the ATM screen. And it's this guy in uniform, it's BDUs. He's in his uniform. He's got a goatee, and sideburns. So I don't know. Goatee and sideburns? Maybe I'm behind the times. I'm older than you. When you were in, was that allowed?
No. Yeah. You were allowed to facial hair. Yeah, cut the sideburns to right here. Yeah.
There wasn't Casual Friday?
No. Friday,
no. Yeah. This large bank saying that they're supporting the veterans didn't have the decency enough, or whatever you want to call it, they couldn't pay the attention to detail, whatever, didn't care enough to get a real veteran to take pictures. There's plenty of veterans, okay? Between all the active duty services, National Guard reserves, I'm pretty sure, or retirees, you can get a veteran, somebody in there, instead of pork chop sideburns and goatee, or whatever kind of they had in there. So that's if you truly want to be a VA lender, then show it. Train your personnel. Heck, start a VA team. One of the problems, I'll just say real quick, just to, advice to other companies, start a VA team. Because you've got the volume coming in and it's getting disseminated throughout your entire staff. Well, because maybe the VA volume is a lot lower than the conventional loan volume, they're not going to get that many touches. They're not going to get that much experience, that tactical experience. Maybe they've got some training so they get a little technical ability, but they're not going to be able to employ, in real life, actually getting their hands on a VA loan. But if you had a VA team, then those loans could funnel into that one team. And so they can get more experience day to day working with those VA personnel. And you could do it. It's just a matter of the effort. And I know these companies have the resources to do it. I would say to any upper management or leadership, I would close with saying this: if you don't think you have the resources to to employ a VA team on your floor, I'd say when you go out to the parking lot, look at your car. And then when you drive that car home, when you get out front your house, look at your house. If you've got $100,000 car and a big ass house, then you've got enough resources to employ a VA team and properly train that VA team and service veterans properly and not just talk about it. So that's my mission. Sorry. I'm going to make it happen. I'm going to make that happen through just leading by example. I can't control everything out there. I understand that, but I'm going to control what I can control. So here, we're going to be technically and tactically proficient. We're going to truly serve veterans. We're going to have veterans serving veterans. That's what we're going to do at United Real Estate Capital, and hopefully others will follow the example.
What information did you need to start a VA loan?
Not a whole lot. It's the same information as if we were doing a regular loan. It's close to the same documentation. If we're doing a fresh loan, it's different. You've probably heard of the interest rate reduction refinance loans, or the Streamline. It's also called VA Streamline, where it's reduced documentation. No appraisal, no income valuation, and in some places no credit, depending on what lender you're doing it through. But it's the same information. Obviously, they're going to ask about typically ask about DD-214s or your certificate of eligibility. But now, because the VA is getting hip with the times, a lot of it's online. Your processor could pop on and pull that information up. So, but you'll still have places asking for, in addition to any other regular documentation, whatever, paycheck stubs, W-2s, the standard stuff, tax return, you'll have them asking me for a DD-214 or certificate of eligibility, but a lot of it's electronic now. So, yeah, it's nothing special. Don't have to do any backflips. Just have to be trained properly.
To be eligible for a VA loan, you don't have to be out of the military, right? You can still be active duty?
Yeah, you can. It's for active duty personnel also. In fact, they break it down on the VA's website, again, where I recommend folks going. We're going to put that there because there's a ton of information on the VA website. So on United Real Estate Capital, what we'll do is bulletize it, make it a little easier, but there's great information. And on the VA website, it actually addresses eligible parties. We'll put a link. We'll put a link to that also because we want you to visit that too. We'll have information, but we'll provide a link to that page where you can see that, and you can see all the different eligible parties, how much time in service or what type of service is eligible. And, they address reserves, National Guard, active duty, et cetera, retirees. So it's a lot of good information on the website. But make sure, again, .gov on there.
All right. Earlier you spoke about having okay credit or average credit or excellent credit. In your opinion, what would be like the ideal credit for somebody to come in with? Is there an ideal one, or is it just whatever, let's just try first?
Well, like say on the conventional loans, we have these matrices. Most of them are built into the computer systems, but major derogatory items aside, like bankruptcies, foreclosures, etc. If we're just looking at the score alone, it'll be broken up into I think it goes into about 10-point increments, or is it 20-point increments? So you'll have think in my head a range from 620 to 640, then 640 to 660, 660 to 680, 680 to 700, etc. And so I see at a lot of places, again, this is going to vary depending on where you go, but a lot of places 740 and above is like the highest category for loans going to Fannie Mae, Freddie Mac. We'll call them these conforming loans. At some jumbo lenders, they'll even have higher categories like 760 and 780. But a lot of places 740 for most of those conforming loans. 740 will put you in the highest category. So nationwide average, the last time I checked for credit scores, was by about let's check it recently. I haven't checked recently, but 670 to 680. 670 to 680 was about nationwide average for actual credit scores. So if you're sitting at like a 660 or so, you can still get yourself a loan, but it's like below average, it'll be considered. And if you're doing a regular conventional loan, that's going to hit you. It's a pricing adjustment, we call it. So that pricing adjustment is going to be fairly severe. Someone with a 660 score is going to get a lot worse pricing than someone with a 740 score. Like that same loan, the 740 person could probably get that, say, on a $500,000 loan or $450,000 loan. That person with the 740 score, they say they can qualify for, I'm just throwing out an example, 2.99 with no closing fees. That 660 person, that 2.99 might cost $10,000 in fees. Just giving an example of how extreme it could be with the loan level pricing adjustment. Flipping over to VA, that 660 person can still get some excellent pricing. Those loan level pricing adjustments don't hit them as much. And again, depending on the lender, different lenders, they can restrict upon guidelines as they choose to. They just can't expand upon, guidelines, but they can restrict upon them. So, but they're going to have, in most cases, you're doing the VA loan, you got a 660, you're going to get a lot better pricing than if you had 660 doing a conventional loan.
Oh, I know you can't really give me a dollar amount, but percentage-wise, I mean, what would you say is a pretty a good down payment to start with?
Well, that all depends. And this is what we're talking about on the VA loan benefit allows you to put as little as nothing down. A lot of folks don't know you can use a VA loan on a purchase and still put money down. And if you're paying a funding fee, if you're not eligible to have your funding fee waived, if you're not receiving 10% or more disability, your funding fee actually gets reduced the more amount of money you put down, that's another thing a lot of folks don't know, that you can use your VA loan, put money down, and your funding fee gets reduced. But if you're doing, like, say, regular conventional loan, your credit's good, depending on what lender you're going through, you can put as little as like 3% down. Obviously, when you're putting 3% down, you're going to get hit with private mortgage insurance. You're putting less than 20% down, unless you're doing some type of lender-paid mortgage insurance loan. If not, you get hit with the mortgage insurance, PMI. If you're doing an FHA loan, it's the same thing, but they call it MIP. Instead of private mortgage insurance, they call it mortgage insurance premium. So PMI versus MIP. You down with MIP? No. So if you're doing your VA loan doesn't have PMI or MIP. That's another beautiful thing about it. So you can put little or no money down on a purchase, or if you're refinancing, have little or no equity, and you still don't have to pay PMI. That's part of the, that you get. So it depends on the smaller your down payment, the larger your monthly payment's going to be. And typically on a conventional loan, the more you put down, the better interest rate you're going to get. You put 5% down versus putting 20% down, you're going to get a better interest rate pricing, I should say. That same interest rate of whatever, 2.9, we use that example, would cost you a lot more if you're putting 5% down as opposed to 20% down. And then your monthly payment obviously is going to be higher if you're putting less money down because your loan amount is larger and you have PMI. Again, VA loan is going to be a little bit different, no PMI. Any other VA questions you could think of that you might have?